What if the invisible hand of geopolitics had the power to shape and shift the global financial landscape in ways we could hardly imagine? Welcome to a journey that explores this intriguing intersection, where money meets power and borders. Consider the case of China. Just a few years ago, the global financial community held a strong conviction that China's currency and markets would become central to global finance. However, the COVID pandemic, geopolitical tensions, and China's crackdown on various sectors have challenged this belief. The invasion of Ukraine by Russia, followed by Western financial sanctions, has further increased the risk of sanctions for investors in China. The result? A significant slide in the yuan's offshore rate against the dollar. Swiss wealth manager Julius Baer has even removed Chinese equity as a standalone investment and reduced direct Chinese equity investment to zero. Clearly, geopolitical considerations have become crucial in cross-border investments. Now let's shift our focus to the United States. The Biden administration has proposed a series of tax reforms aimed at increasing corporate taxes and closing loopholes. This move is seen as an effort to fund infrastructure projects and reduce income inequality. However, it has raised concerns among investors and businesses who fear that higher taxes could hamper economic growth and reduce corporate profits. The debate over tax reform is intensifying, with both supporters and opponents making their case. In Europe, the European Central Bank, ECB, is facing its own challenges. With inflation rising and the economy still recovering from the pandemic, the ECB is under pressure to take action. Some economists argue that the ECB should start tapering its bond buying program, while others believe that maintaining accommodative monetary policy is necessary to support the fragile recovery. The ECB's decision will have significant implications for the Eurozone and global markets. Moving to emerging markets, India is grappling with a surge in COVID cases and a struggling healthcare system. The country's economic recovery is at risk as lockdowns and restrictions are imposed to curb the spread of the virus. The situation in India serves as a reminder that the pandemic is far from over, and that the road to economic recovery remains uncertain. In conclusion, the invisible hand of geopolitics continues to shape and influence the global financial landscape, from China's challenges to the United States' tax reforms, from the ECB's dilemma to India's struggle with the pandemic. These geopolitical factors have a profound impact on markets and investments. As investors navigate this complex landscape, understanding and analyzing these geopolitical considerations is crucial for making informed decisions. Now let's delve a bit deeper with a specific example. Beijing, a biotechnology firm, became the first company to trade its shares in Shanghai, Hong Kong, and New York. This move reflected the development of China's capital markets. However, the firm faced the risk of being delisted from Nasdaq due to Sino-US tensions and the inability of its Chinese auditor to be overseen by US watchdogs. This scenario illustrates the costs and risks of navigating different sets of rules in a geopolitically charged world. Moving away from China, let's turn our attention to South Korea. LG Energy Solution, a South Korean battery maker, raised a record-breaking $10.8 billion in its initial public offering. This was largely driven by international investors looking for opportunities outside of China, highlighting how geopolitics can redirect investment flows. In summary, geopolitics has a profound impact on global finance. It influences investor decisions, shapes investment landscapes, and can redirect investment flows. As we have seen, geopolitical considerations have challenged the belief that China's markets would become central to global finance, impacted the decision of a biotech firm to list on multiple stock exchanges, and steered investors towards South Korea. In an increasingly interconnected world, the intersection of geopolitics and finance is a reality that investors, businesses, and policymakers cannot afford to ignore. The invisible hand of geopolitics, it seems, has a firm grip on the pulse of global finance.